which have been cutting imports from Iran, and whether or not that gap can be filled is what really seems to be adding premium to those prices. But Peter McGuire now joins us for more details on that. Peter, hi, good to have you. First of all, what would you give the run-up in the crude oil prices that we've seen in the last 24 hours? And do you actually see it going further on in this week now?
Well, I think it's been a wonderful time if you've been bullish oil over the last, 48 hours, or really since the end of last week, Manisha. It's been spectacular. A couple of things that are really in the points that you raised, but there's also, I think, that the bulls are out, hedge funds are long, and you've got so much uncertainty with moving parts. What's happening with Iran? Where do the weather outages play if those hurricanes start to progress from here? And we've still got 2.5 months to run for the hurricane season. And then what's happening with the US dollar and the uncertainty with trade sanctions moving into China. So you look at the big picture, WTI just about on 70, Brent on 80, and I think it's got to have a $3 or $4 rise from here over the next couple of, maybe another week or so. More upside.
Peter, the major concerns really seem to be coming in from the supply side, rather the consumption outlook, because almost nobody seems to be talking about the demand factor right now.
Well, that's exactly right. I mean, there's so much uncertainty from the demand, from the production side, and I think that's really just the wake up and, as I said, where Russia sits, what's happening with this next OPEC meeting, what's happening with the Iran situation and sanctions there, all of those moving, actors. And then don't forget the Venezuelan situation. That hasn't got any better. That's probably only got worse over the last couple of weeks. So then you're looking at consumption. And, more inhabitants. We're very much aware that the world's population's doubled in the last 49 years. So, you've got more consumption. It's just as simple as that. So I think that you're going to be through that probably 101, 102 million barrels by this time next year as far as daily consumption. And you probably need a far more bigger appetite for electric vehicles to stop anything dramatic to the upside.
Peter, so would you say that this $3-4 more that you're talking about, this is purely because of this hurricane, or it's more fundamental? Because consider three other factors. One, I mean, if you're talking about this trade spat and issues around the world hurting emerging market growth, the biggest consumers are China and India, incremental consumers of oil. So that should hit growth, oil consumption growth. Second is the dollar. I mean, the dollar is strengthening. I mean, all U.S. assets are going one way, which is up. Can oil continue to rise if dollar is higher? And third, we've got U.S. midterm elections coming. We've seen past presidents want lower oil around election season, and we've got Mr. Trump in the White House. So add these three things together and tell us whether one should be fearful of much higher levels from here.
Well, I think first of all, answer number three, it's an unknown quantity, and the landscape as far as President Trump, he's certainly a unique president compared to previous presidents. Also, he's got record highs as far as growth. Unemployment numbers are, I don't think we've ever seen numbers like it. We've got relatively low interest rates if you look at the historical data. And you've got a Dow and an S&P that are shooting the lights out every week with higher numbers. The second part of it is, will India and China be affected? Certainly, as far as prices going higher, but it's still a lot cheaper than what it is 10 years ago, and possibly not for India, but far cheaper than what we experienced with those $110, $120 a barrel. So, I think it's far more affordable. And thirdly, yes, the uncertainty as far as weather outages and the Iran situation and Venezuela and Libya, it's not uncommon. We're at the end of the summer season, and I feel as though that, the momentum at the moment is up and it's bullish, and don't stand in the way of it. Hedge funds are all over it as well, open interest, and it's a bit of a glory trade at the moment. Don't stand in the way of a bull market.
Sure. Peter, just taking in from what Prashant just mentioned, even as we are looking at the crude oil prices at around 80, the rupee is depreciated clearly, and we are looking at all-time highs in sense of petrol and diesel prices into Indian markets. But even then, we haven't seen demand go down at all. If anything, the markets are anticipating that India's crude dependence will only increase. We will only be importing more going forward. With that kind of a scenario, how would you look at India?
Manisha? I travelled to India, and you know, probably 10 times in the last 3 years, and I'll be there again in about 2 months' time on my way to OPEC.
Yeah.
The thing that surprises me more than anything is the mobility of that nation. India, like the rest of Asia, is addicted to crude oil due to mobility, motor cars, motorbikes, trucks, you name it. You've got a growing population and everyone wants mobility to ride a motorbike at the least. Then they come up the consumption curve to a car, and this is just the normal course of events. A few years behind what they've done in the East, in the mature markets, and it's wonderful to see that engagement, I think. So, like it or not, you're going to see more people riding more motorbikes, more cars, more roads, more trucks, and it's just going to be the state of play, Manisha. You can't get out of that.
Well, absolutely. We are addicted to oil, I think is the right way to put it. Thank you so much, Peter, for joining us. So that's a view really coming in from Peter McGuire. More gains, at least $3 to $4 on the higher side, even from these levels is what really he seems to be talking about.
It just seems, as Peter mentioned, a momentum kind of a thing, right? I mean, it's a bull market, so don't stand in the way. And that makes sense if you're trading oil, so absolutely. But I mean,
but at least better than the 100, 110, 120 that we had seen on Brent crude.
To Peter's point about it's more affordable, I mean, actually, it is not. In India, I mean, retail prices, it doesn't matter if oil is 150 and we are paying...
You also have the rupee to
Prashant, just to put a very interesting conversation that we were having, that people who are filling in their tanks and cents of petrol and diesel are still filling it for $1,000. So they don't really look at how much petrol does come for that. I think they're just sticking to that round figure.
I mean, I take your point. I mean, I'm
but
just
they're traveling less then.
No, I think, but the broader point is that will growth start to suffer, right? I mean, at aggregate level, you and I go into the pump, and so you may not notice, but at an aggregate level, it does start to seep in, and at some point it starts to work against us.